Hey guys, just getting set up here. We're gonna have a little pregame here for the next 10-15 minutes, and we'll get started right at 12 p.m. So please spread the word on whether you're watching on YouTube or X, Rumble. And got a nice little treat for you here in just a minute. Stay tuned.
And I believe in America. America has made my fortune.
Oh, Godfather for you.
And I raised my daughter in the American fashion.
The Godfather News interview. We'll get started.
I gave her freedom, but I taught her never to dishonor her family. She found a boyfriend, not an Italian. She went to the movies with him. She stayed out late. I didn't protest. 2 months ago, he took her for a drive with another boyfriend. They made her drink whiskey, and then they tried to take advantage of her. She resisted. She kept her honor. So they beat her like an animal. When I went to the hospital, her nose was broken. Her jaw was shattered, held together by wire. She couldn't even weep because of the pain. But I wept. Why did I weep? She was the light of my life. Beautiful girl. Now she will never be beautiful again. Sorry. I went to the police like a good American. These two boys were brought to trial. The judge sentenced them to 3 years in prison and suspended the sentence. Suspended the sentence? They went free that very day. I stood in the courtroom like a fool. And those two bastards, they smiled at me. Then I said to my wife, for justice, we must go to Don Corleone.
Why did you go to the police? Why didn't you come to me first?
What do you want of me? Tell me anything, but do what I beg you to do.
What is that? That I cannot do.
I'll give you anything you ask.
We've known each other many years, but this is the first time you ever came to me for counsel, for help. I can't remember the last time that you invited me to your house for a cup of coffee. Even though my wife is godmother to your only child. But let's be frank, you never wanted my friendship. And you were afraid to be in my debt.
I didn't want to get into trouble.
I understand. You found paradise in America. You had a good trade, made a good living, police protected you, and there were courts of law. You didn't need a friend like me. But now you come to me and you say, Don Corleone, give me justice. But you don't ask with respect. You don't offer friendship.
Look at Largo, guys.
You don't even think to call me Godfather.
9% on ALAR, baby.
Instead, you come into my house on the day my daughter's to be married and you ask me to do murder. Money.
I ask you for justice.
That is not justice. Your daughter is still alive.
Let him suffer then, as she suffers. How much shall I pay you?
Buonasera. Buonasera. What have I ever done to make you treat me so disrespectfully? If you'd come to me in friendship, then the scum that ruined your daughter would be suffering this very day. And if by chance an honest man like yourself should make enemies, then he would become my enemies. And then they would fear you.
Be my friend. Godfather.
Good. Someday, and that day may never come, I'll call upon you to do a service for me. But until that day, accept this justice as a gift on my daughter's wedding day.
Grazie, Godfather.
Great. Give this to Clemenza. I want reliable people that aren't going to be carried away. I mean, we're not murderers, in spite of what this undertaker says.
Little Godfather for you there. All right, we're starting in 5 minutes. It's a good time now to retweet wherever you're on X, on YouTube. Gonna have a real exciting show. And at the top of the show, we'll go over very quickly our top picks for today. Look at Alar. Oh my gosh, we went 2x on this at like $24.50, $30 now. That's the winner of the day. SMCI also doing pretty well. Dell a little bit challenged, but we're in this before the day started. All right, go ahead and let your friends know. We get started in just a few minutes.
It's not easy to understand why stocks go up and down, but even in volatile markets, there's always a discoverable and logical reason behind price action. StoryTrading is a social investing community of investors who share information to uncover the hidden stories behind the trade through the 4 pillars of fundamentals, catalyst, sentiment, and technicals. All price action can be understood through the lens of these pillars, allowing for a holistic view that empowers better decision-making. Only by understanding markets can you beat them. Join our community today and start making sense of markets.
What's happening, Story Trading family? Hope everyone's having a great night tonight, and let's just check out some of the plays that we had yesterday in our Discord. So yesterday in our Discord, as you see here, we had here some of our top 3 picks. The first one being Dell, SMCI, MU. And man, let me tell you, some of our members absolutely crushed it yesterday. Some of them made 100, 200, 250% returns, and some made 100% returns in the first 8 minutes of the market being open. Absolutely massive. But what's even crazier is the news that we just got. Check this out. So, Dell, NVIDIA, and SMC collaborate to power Musk's Gronk AI factory.
All right, Dell, beautiful. Look at this. It's gapping above the 20 DMA. I missed this move yesterday during the day, but now I see it. Wait a second. It's back below the 20 DMA. All right, so that's an important level, but the RSI is low. I'm going to anticipate that we will break above the 20 DMA. All right, this was the earnings. Didn't have great earnings. I think it was a margin issue, but their guidance was good. So 144.31, low RSI, AI tailwinds. You break this 20 DMA, then you're into the gap. Well, 144.80. So we want to break 144.31 and then 144.80, and then this thing can really move maybe into the 160s. To open Dell, I bought in pre-market. I might buy some call options right at the open. Good afternoon, everyone. It's Thursday, June 20th. We got a special show for you. Starting in just a minute, we'll be interviewing the Godfather now. The Godfather knows from Twitter, FinTwit influencer. First, real quick, top picks of the day. These were really carried over. We've been in these plays in a big way, Dell, SMCI. So even though it's down intraday, we took advantage of the gap there. Benefited from that gap, opened 6% on SMCI, 1% on Dell. Gave a little guidance in our Discord community of where to get the dips on Dell, which has been working out today. Alar, though, oh my gosh, we went 2x position on this yesterday, or Wednesday, was it Tuesday, at 24.50, up 10%. Back over, I believe, the key level, 50 DMA. We had the right analysis on that catalyst. We determined that the sellers were wrong on that catalyst. We ignored the technicals. We bought the dip. That's the way we like to do it. And McDonald's also very strong, gave you a catalyst this morning. And speaking of the catalyst and the sentiment and the technicals, we just played a video, if you were here earlier, on the story trading methodology. And what we do is we look at markets holistically. We don't look at it one-dimensionally. We don't look at it as a pure fundamental investor. We don't look at it as a pure technical analyst. We look at catalysts. How do catalysts impact fundamentals? How does a catalyst impact sentiment? Then we look at the technicals to arrive at a thesis. And that And that is why we brought on the Godfather Knows. All right. The Godfather Knows, someone I've been collaborating with on Twitter, on X. And I've noticed he has a similar philosophy. He really, a very smart guy. He looks at things holistically, considers all of those aspects: fundamentals, catalyst, sentiment, and interview. If you're ready, we're going to throw the camera on you. The Godfather Knows. Let's go. Welcome. How are you doing?
Hey,
Can you hear
Ben.
me?
I'm great. Thanks for having me.
Awesome. It's a pleasure having you here. Just gave an introduction of, your trading philosophy, very in line with what we do at StoryTrading. So excited to be collaborating with you on Twitter, in our Discord. You got a nice little presentation for us today. But before you start that, why don't you just a quick, let people know who you are, 30 seconds.
Yeah, so I've been in business since 1991, and over those 33 years, I've pretty much done it all. I started in equity research, did a little stint in fixed income derivatives, both from an agency and liability trading side. Spent several years in corporate finance, financing companies, doing IPOs, typical investment banker stuff. Then went and covered hedge funds, ran a risk arb desk. And since 2007, I've had what I would call my dream job, which is essentially running a hedge fund, family money, my own personal family office. So
beautiful.
Yeah, that's me in a nutshell.
Awesome. All right. With that said, I think you got a little presentation you want to go through. I think everyone can see that. Let me make sure your audio is on. Okay. There you go. So I think you're going to talk a little bit about your process, a little market overview, then we'll dig into some specific stocks, some of your favorite picks. So go, you're on.
Yeah. As Ben mentioned, we are kind of aligned in the way that we see the world, or certainly the way that we see investing. As my bio on X says, I try to do more of what's working and less of what isn't. That sounds simple, but it's often hard to do in practice. But you can choose to invest with the wind at your back or in your face. I choose the wind at the back. Some people call that momentum or growth investing. Look, investing is hard enough. So if you've got a strong theme behind you, and this is really the start of my process, I look at what themes are working in the market. Clearly, in this market, we know what the big themes are: the likes of AI, the likes of GLP-1s, these kinds of things. You can screen the market 6 ways to Sunday through all sorts of tools like FinViz, et cetera, to see what's actually working. You find a sector that you like, a theme that you understand, that you get. And then I do a sector deep dive. I'm a fundamental guy, so I'm looking to see who the leaders are. I'm looking to see who's undervalued, overvalued. Is there an opportunity to put a barbell on in that sector? Should I just simply buy the leading names? Who's cheap, who's dear, those kinds of things. I will say that over the years, I've made more money owning names that are expensive versus cheap, but you'll see from my X posts that I do always try to put the names that I own in context to their peers to see how they stack up, see just how inexpensive or overvalued they are. So I run essentially 2 buckets. One is a buy and hold, long-term, always looking for those long-term compounders, the proven performers, the sector leaders, the cash cows. I will opportunistically trade around those core positions. That's sort of bucket 1. And then bucket 2 are compelling setups. And this is, call it what you will, day trading, swing trading, scalping, position trading, that sort of thing. So that's my process in a nutshell.
Sounds great.
So before I dive into my sector picks, and I'll go through this relatively quickly, but I think it's really important. Context is always important, but it's more important probably today than it has been for a long time, because look, we've had this massive market move. This is the Qs, the S&P, and the Dow. We all know this big move that's happened off the lows in late October and has carried on this year. We're up some 40% in the Qs. 20% or half of that's come this year. S&P is up 30-something%. Again, about 14-15% of that this year. And just look at the S&P, for example, that 15% year to date. it's about a third. 5% of that is NVIDIA alone. The other 5% is the rest of the Mag 7, and the rest of the 493 account for just the other 5%. So look, these aren't normal market returns, and I think it's important to remember that. This isn't 7 to 10%. So I would be remiss to say that I feel like we're somewhere in the sort of seventh inning here, and nobody wants to be the guy that's picking up nickels in front of a steamroller. So it's great when the themes carry on as AI has, and the gifts keep giving. But remember that markets don't always work this way, and there will be days, there will be weeks, there will be months when seemingly nothing is working. So enjoy it while it is, but it's also important when the market gets as extended as it has, to position size and to put stops in accordingly to protect your capital. So the best case scenario here, and it's actually, what I think and hope will happen, certainly, is that we see some healthy pullbacks and then a continuation of these gains. And in the sectors that are working, you can continue to find distinct individual opportunities where you can find outperformance. So a lot of this gain that we saw from October, I think, was the market, and certainly in the first couple of months of this year, was the market anticipating that we were going to see these 5 to 6 rate cuts. I think everybody's comfortable that the Fed put is still in place. If we look at where we're at in terms of easy or tight financial conditions. So, what's happened? Why are the markets still going up despite the fact that interest rates haven't come down? We haven't got those 5 to 6 cuts. Well, as much as Powell would like to tell you that financial conditions are tight, if you actually construct a liquidity index that shows the Fed's balance sheet, reverse repos, and the Treasury General account, you can see the liquidity index, and it shows that financial conditions are loose. I mean, some 20% of U.S. government debt is held by the Fed on its balance sheet. Banks are parking excess liquidity through the reverse repo facilities at the Fed. Then you add in the government's overall cash balance. And, this is a backdrop that's been friendly to the markets, but we have concentration, which this chart shows. Here's the relative strength of the S&P equal to market weight. And, you can see it's the lowest since 2009. And this is what's bugging everyone. This is why it's one of the most hated rallies that we've seen, because most every institution or hedge fund, anyone that isn't essentially quasi indexing, has been underperforming their benchmarks because there's a real lack of breadth in this market. And if you sit on a weekend and look at 100 charts, which is something that I do, you'll see this exactly. There are very few places in the market that actually have been working. So I'll show you another chart that shows, this is from Goldman Sachs, and you can just see the year-to-date inflows. It's really all focused in technology, a little bit of love for industrials, but beyond that, money's just flowing out of these sectors. So what is this translated into? Well, it's translated into the Mag 7 exceeding a combined market cap of $15 billion for the first time ever. I mean, put this in context of the US GDP, that's like 50%. And I think what's important, in the context of what I was saying about the market of late, is that 2 trillion of that 15 trillion has come just in the last 2 months. And it's probably a little bit more than that given NVIDIA's move of late. So the Mag 7's moved 60% over the last 12 months. And that's pushed a combined gain of 20% on the S&P. So you're over 30% weight now in the S&P, just the Mag 7. That's by far a record in terms of concentration. So let's go back and talk again about this rotation. And, first, here, this chart on the left, you'll see exactly what I'm talking about. The gas hasn't come off the pedal. You can see it in the put-call ratio. We're making new highs. People are pressing their bets in the sectors that are working, like AI. NVIDIA is hitting new highs daily, et cetera. So people are desperate about where is the rotation going to go, and what are the new sectors that will lead. And I think that the Russell or the IWM gets a little bit too much attention as a potential candidate in this regard, in my opinion. You've had Fred Lee at Fundstrat calling for 50% gains in the IWM this year. If you actually look at the IWM, which is the third chart here, you'll see that, the Russell did move 25% off of its lows, but essentially since the beginning of the year, it's been flat. And I'll say that I've been intrigued by this because one of the smartest guys out there is Stan Druckenmiller, and I watch what he does. And he took off some of his NVIDIA calls around mid-March, and he bought IWM calls. Now, for me, small caps, we all know that they need narrowing credit spreads. They need lower rates to work, and we're not getting either of those right now. So yeah, the last chart here again just shows what we were already talking about, which is massive outperformance of the semis versus the Russell. So where do we see rotation? Here, let me just before I talk about that, the top chart again showing what we just saw in the other chart there, this massive outperformance that continues with the Nasdaq over the Russell. We're seeing a little bit of an uptick in some of the defensives over cyclicals. I think that's rotation into utilities, some of the power trade, which is second derivative AI trade, which we'll talk about. But look, this is still very much a high quality, large cap tech market. And you can see the outperformance here. But here's where I'd like to focus your attention, and that's on the bifurcation in tech itself. We all know that AI, especially large cap hardware names, have been leading. And look at AI, non-AI tech year to date. It's pretty much been flat, but we're starting to see a bit of an uptick here. And, the market returns and multiple expansion happens where you've got earnings growth. And, it's been justified, frankly, in the semis, in the large cap AI hardware plays, because you've seen some 40% earnings growth in this group. And I do think they're going to continue to lead until that earnings growth slows. And the next slide, we'll talk a little bit about that. But for my money, I think you see a rotation into the IGV, into this high margin software names, especially the names that are starting to benefit from monetizing AI. And again, we'll talk about that. But let me just go to this next slide here first. So here, again, this is what I was talking about. It's not just the earnings themselves, but it's the rate of change in the earnings. And this is what's happened to the consensus earnings estimates for the Mag 7 over the last year here. They continue to get revised upwards. And as long as this trend continues, those names will continue to outperform. But look at this. And again, this is Goldman Sachs looking into 25 and 26. So we've seen this massive outperformance of these names from an earnings basis, and of course from a market basis in 23 and again this year. And look at the outperformance and earnings growth expected this year. This starts to narrow as we go into 2025 and 2026. I mean, you would expect this just by a law of numbers. Math would suggest that. Year over year, you don't see the same kind of comping, but you start to see a bit of a pickup on a relative basis in terms of earnings contribution from the rest of the S&P versus these big cap names. So look, right now, you've got a market multiple on the S&P that's in the high 20s because of the outperformance and because of the valuation of large cap tech. And if you take that 30% weighting of large cap tech and you do sort of an average multiple on the Mag 7, yes, they've got 30%, 37%, I guess, earnings growth this year as calculated, but the multiple is on average up around 33 times. So do I expect that to come down? In time, I do, but frankly, I expect the S&P multiple to stay in this high 20 range for a while. So going back to what I was talking about in terms of where I think rotation goes, here's the chart showing the outperformance of the semis versus software names. And you can see it's quite staggering. Money's been chasing, obviously, the CapEx cycle, the big cap, Google's, Microsoft, Meta's, essentially software companies, investing in AI hardware. But now we're starting to see some of these guys monetize this, and you're seeing it certainly in Meta. You're seeing it in Microsoft. You saw it finally in the most recent Adobe quarter. CrowdStrike is deploying AI more and more to fend off attacks that are more and more AI fueled. So here's just a sample of software names, and you're seeing some good, from the bottom left to the upper right type performance out of this group. And yeah, one of the names that I'd like to talk about that's in this group specifically is AppLovin. And I think that this is probably one of the best real world examples of AI, and it's, in my opinion, kind of hiding in plain sight. If you look at this post from X here, this guy had a look at the PEG ratios of all the top software companies, and AppLovin is right at the top. So what is AppLovin? What do they do? We all know that apps are huge. There's some 5 million apps in the world. There's some 6 billion users. These guys have discovery engines and recommendation engines that drive traffic for app developers to their apps, and then provide all sorts of analytics for them to run advertising campaigns to monetize you as a subscriber to their apps. So, collectively, their new ML AI powered Axon 2.0 engine has been responsible for a 50% lift in ad spend to their clients, but we're talking about 10 billion in cumulative ad spend, some 21 billion app installs driven by their AI engines, and that's almost 1.5 billion of daily active users. So basically, everyone that's got an app is using AppLovin, and this is a software business. It's got 73% EBITDA margins, and it's pushing now the legacy app, AppLovin's actual own apps business down to a smaller share of revenue, and of course is boosting overall corporate EBITDA margins through 52% now. So, and that's just going to continue to grow. What's also impressive for me as a fundamental guy, I look at conversion of operating cash flow to free cash flow, and you're seeing like 70%. So essentially, more and more, every dollar of revenue starts flowing right to the bottom line, and they're putting that cash to work for shareholders in buying back stock. And you'll see in my table here, relative to the rest of the group, kind of highlighting what was shown in this PEG table. They are relative to growth and margins, which are the two things that really affect multiples. Still middle of the pack. They should be near the high. I don't see any reason why trade desks should have such a premium multiple to AppLovin. So this is one that I trade around, but this is definitely one that sits in the long-term compounder group for me. And I will buy and hold, continue to hold this thing. They're taking their technology outside of the app store, and they're applying it to other adjacent categories like connected TV as well. So they've got the algorithms, they're proven to work. Just a fabulous company. And most people don't appreciate that this thing is essentially fueled by AI.
Beautiful. I like that. Thank you for that. I've heard a lot about app from a lot of people I trust, and I didn't have the chance to look into what they actually do. So that was very helpful.
So sticking with the theme of, the wind at your back, and again, software, the names that I like are the ones that have an AI tailwind. We all know the other performance that we've seen in the market has been in these other AI second derivative plays, whether they're power plays or, whether they're racks or providing the other infrastructure to the data center like Dell or like SMCI. I guess I don't think it's on here, but Air, I know that's one of your favorites, Ben. We could talk about that for a second if you want.
I was planning on bringing that up. Yeah.
So it's a second derivative play as well. It obviously had this massive return in late 2022, returned some 300% from I think September 2022 to the summer of 2023, riding the EV wave. Silicon carbide sort of took over there, and they became the industry standard in terms of high volume testing of those wafers. Now, we all know that EV demand is stalled, and demand for their testing machines as a result has stalled. Revenue estimates are essentially flat next year over this year as a result of that. But recently, management has come out and said, "Hey, we can use our wafer level burn-in for multi-die, package wafers, and these are things that are used in data storage, things like high bandwidth memory, AI accelerators, and all the rest of it." So, Ben, you did a great job of highlighting this in their recent corporate presentation, where they talked about some contract wins. I think the market's going to remain relatively skeptical. They're going to wait to see some traction in the actual financials on this. I bought a little bit here because the stock is now essentially on its lows. It's a low float. It's got almost 25% short. These are the kind of tailwinds that I like. Obviously, any additional qualitative commentary that they can give with respect to contract wins into other sectors that might have an AI tailwind are going to cause pops in the stock. But I think for a long-term sustained move, you need to see it in the quarterly earnings. So they next report on the 12th of July. You're not going to see it in the quarter, but their fiscal year end was June, and they started talking about fiscal 25 starting to see some deliveries in these other segments. So that's this month. So I want to see this thing trade. If I look at it on a technical basis, a breakout would be the $14-15 range. And if we see that, I'll add a little bit more. Once we start seeing it come into the actual quarterlies, then hopefully we can get another one of these rides like we saw in late 22 into 2023, because these guys have an exceptionally strong track record of, once they demonstrate to clients using their clients' own wafers, they're good track record of actually onboarding these guys.
Yeah, let me just add a little bit. Let me just share my screen real quick. So here's air. It's pulled back. I just see this pop here from like 1150 to 14. That's because quietly in 8K, and then subsequent to that at a investor conference, they revealed that they have an AI accelerator customer that's testing out their solution right now. And based on some further research I've done, I believe that customer is AMD. It's not NVIDIA. They specifically said it's not NVIDIA. But there's also, based on the research I've done with my colleagues, an expectation that testing contract will move on to a high-volume production contract by the end of the year, so a couple of quarters or less from now. So if that happens, look out above.
Yeah, and the other two sectors there are data storage. Interesting that in that same corporate presentation, they show Toshiba, they show Micron, in addition to graphics of Jensen and Lisa Su. So they're certainly trying to mold the story that they are now in or soon to be in the AI business. So anyway, getting back to another pick that's a second derivative play in a second derivative AI play. This is on the power side. Is Vistra. This name was recently added to the S&P 500, so got a nice pop there. Up until I think of late, it had been outperforming even NVIDIA. And I did a deep dive on this sector, and I figured out that a lot of these power plays that people talk about as having AI exposure, really maybe have 5% or 10% or what have you. But for the most part, they're regulated utilities. And I have a friend that actually works in this sector, and he educated me to the fact that if you're a regulated utility and you provide power, you can't just simply go what they call ahead of the meter. You can't just take that off of the network because there's all sorts of network balancing requirements for keeping that power there. It's regulated. They're required to continue to provide power to those that they're providing power to. So if you really dig down and find the guys that are independent, they are unregulated, they can sell their power to whoever they want, the list is short, and especially the public company list is short. So, I put that together in this table. We've got names like Constellation. Yes, they provide power to the grid, but they also provide power to data centers. Vistra, NRG, Talon. So in my opinion, again, this is another example where you buy the market leaders. Vistra has been the best performing. I think it's going to continue to be the best performing. What I really like about this group is that, they're pushing software type margins. We're talking 30% EBITDA margins, but yet you're paying sort of 10 times EBITDA multiples. If these were actual software companies, those multiples would be in the 30 times. So I think you're going to continue to see strong EBITDA performance out of these companies. But B, I think you're going to continue to see multiple expansion in these names as well. I'll point out TLNE, which trades on the OTC right now. They are doing an uplisting that's going to happen sometime in 2H 24. The stock's been performing well. I think of late it's actually started to outperform some of its peers, I think in anticipation of that uplisting. So there's another catalyst there. They recently sold a facility to Amazon or AWS. So yeah, this is a group that I really like. The two names that I own personally are Vistra and TLNE. So yeah, again, wind at your back, AI, just another way to play it. What's another group that's working? Crypto is working. There's a wind at your back here. Let's look at what happened in 2023. These returns of the big miners, absolutely exceptional. We all know what the drivers were: ETF approvals, pending, halving. We've seen all that. Now you've got IBIT and a boom in Bitcoin futures trading. You've got vehicles whereby you can play futures through ETFs like BITX, which is actually a 2x ETF on Bitcoin futures. So, clearly this is taking some of the wind out of the sails of the miners. But I think what's important to see here is look at where the best performing miners have been year to date in 2024. And this list are the guys that are ahead of the curve in terms of moving some of that GPU compute to AI workloads and other data analytics workloads. So again, it's important to look at the macro theme. It's important to look at who the leaders are, in that group. I am bullish long-term on Bitcoin. Sovereign debt everywhere keeps climbing. U.S. fiscal spend is going to do nothing but increase. You got essentially two populist presidential candidates. Interest on the U.S. debt is over $1 trillion now. It's like 2.5% of GDP. So, from a dollar strength standpoint, I think you'll continue to see people look for alternatives. Bitcoin adoption, of course, keeps growing. The ETFs now own about 4% of outstanding Bitcoin. I just read a Bernstein report yesterday, then they expect that to grow to about 15% by 2023. And they're calling for $1 million Bitcoin price by 2023. I'm not sure about that, but nonetheless, we've seen it already. You've had the fastest adoption or the fastest growth in an ETF ever out of the Bitcoin ETF. But it's still just a third of the gold ETF, for example, in terms of assets, and 1/10 of the gold market cap. So I think it's 0.16% of total assets are Bitcoin. All of these things I think are likely to grow. So it's a great place to trade because there's volatility in Bitcoin. But I also own IBIT just as buy and hold for the long term. So what's an interesting name that's, again, got wind at its back in this macro theme? Here's a little interesting one. And I'll preface this by saying that, this is traded primarily in Canada. It trades with an OTC listing in the US. It's kind of controversial of late. There was a CoinSnacks short report that floated around yesterday. I think Bear Cave came out with another short report today. But this is a super interesting company. I think it's worth taking a look at. Its core business is the Bitcoin ETF business, or the ETP, or exchange traded product business. But they go a level below Bitcoin and Ethereum. So we're talking about offering ETPs, and these are outside of the US, obviously. Primarily, these are in Scandinavian countries for now, which have been ahead of the curve in terms of adoption. But they're essentially offering ETPs or ETFs, if you will, on the likes of Cardano, Solana, Uniswap, XRP, AVAX, these kind of altcoins. What's interesting also about this is that because these are smaller, there isn't as much competition. They are generating a combined yield on their AUM that in some cases approaches 10%. And you're probably like, how can they get to 10%? Well, they make money several ways. First of all, the fees on the ETFs are 1.5. Some of them, the smaller ones, are even like 1.9. They provide liquidity or market making in some of those markets where they gain additional fees. But the biggest part is they are also running nodes on a lot of these blockchains. So they are taking in proof of stake blockchains that crypto and staking it and getting yield and collecting that yield for themselves. Now, they just launched a yield Bitcoin ETF, which essentially pays you 5.5% to own Bitcoin. So this thing is trading, or has been trading, relative, and you can see it in the graphs, to the AUM, as you would expect. They are on track, by my guesstimation, to average somewhere around $1 billion Canadian in AUM for 2024. And if you use a number of 7% on that, and then you add in their prop desk, and take a minute to talk about their prop desk, because Novogratz Galaxy Digital, which is also listed in Canada, makes almost all of its money from prop trading. These guys launched their prop desk 2 months ago. They've essentially generated 40 million US, 2 quarters ago. I think it was in February they launched it. They generated 40 million US each quarter. So over 80 million US in profits. If you add that to the core ETP business, I'm assuming they do something closer to 20 million Canadian in the prop business for the next couple of quarters. You get over 200, somewhere around 220 million in earnings, net income. So this thing's trading with a PE of around 3 times. It's just staggering how inexpensive this thing is, just not discovered. The short reports all focus on the fact that they've been hiring promoters to get their story out. Absolutely, they have. They want to uplist this ultimately to NASDAQ. They may do an interim uplist in a Middle Eastern market or the European equivalent of NASDAQ first. But they need to get a share price over $2 US for a sustained period, even just to make that application. So I think it's justified by the fundamentals. And another thing I should mention here is they're porting these products, these ETP products, which are primarily listed on the Scandinavian exchanges, onto other exchanges. They just got approval from the London exchange to list there, and they can essentially use the same paperwork, offering memorandums, prospectuses, all their KYC is in place to have these products listed there. And obviously, the more mainstream the listing, the more likelihood of growing AUM. The fastest growing crypto market on the planet is the Middle East. And they have plans to list these products on Middle East exchanges as well. So I think there's tremendous opportunity for this AUM to continue to grow. Sure, over time, these yields that they're getting from staking, the yields that they're getting from fees that they're able to charge at this point, liquidity, etc., all of that will start to compress. But by then, you're talking multiple billions in AUM and a sustained earnings stream, which I think will command a much higher multiple, certainly much higher than 3 times, or less than 3 times, which is where the shares are trading today. So the thing went parabolic, went over $2 US, I think hit 230 or something, and has now come back, and we're trading around $140 US on the OTC listing. I think it's a tremendous buying opportunity, and I've been buying. I was buying yesterday. I bought again today. By the way, insiders bought $1 million worth at the equivalent of $1.65 US. And I have reason to believe that they are in the market yesterday and probably again in the market today, buying at a discount to where they previously bought. So that's an interesting story. And I'll leave it there, Ben.
Awesome. Very interesting. Good stuff. Really enjoyed that. Wow, this is crazy. We got it right on cue. Talking about the danger of the market. Look at NVIDIA. NVIDIA is down like $10 from the morning. That's crazy. But I really enjoyed that. We're going to be tracking some of these picks that you have. I want to encourage everyone to follow you on X, right? S Mantle is the username. S Mantle, display them there. The Godfather knows. Love collaborating with you. We also have you in our Discord if people want to join. We're in a pre-launch mode. We just launched a Discord. We're configuring and everything, getting it ready for official launch. But you got a free chat room in our pre-launch, so you can head over to storytrading.com/Discord and collaborate with us and the Godfather there. Any final messages you want to get across?
I'll just reiterate what I started with, which is this is a risk-on market, but we also haven't had any material pullbacks, and we really need that to add some health to this market. So, frankly, I would love to see NVIDIA down $5, $7, $10 here, and I'd love to see it take the S&P down 2, 3, 4%. That would be fabulous. I've been expecting it. It hasn't happened. It makes me nervous. So
you may get your wish there. You may get your wish. We'll see. We'll see. I rotated out of NVIDIA into Dell and SMCI last couple of days, which has been good. But man, it's weighing on everything right now, NVIDIA. So we'll see what happens.
Just keep some powder because you never know when your next buying opportunity is going to come.
Yeah, absolutely. Thank you. It's been a pleasure. Till next time.
Thanks for having me, Ben. I really appreciate it.
Take care.
Cheers.